Disney's boardroom battle. Today is the deadline for Disney shareholders to nominate directors to the board. Now, the House of Mouse is gaining the support of a significant shareholder. Activist investor ValueAct Capital Management reaching an agreement with Disney earlier this week to support the company's board nominees at its upcoming shareholder meeting. Now, this comes as Disney fends off a proxy battle with Nelson Peltz. We want to bring in Doug Creutz. He's TD Cowen Managing Director of Media and Entertainment. Doug, it's great to see you. So let's talk about the fact that ValueAct is now on the side, or I should say Disney now has ValueAct on board. To what extent do you think this is going to help Iger fend off some of the pressure that we're seeing from Peltz?
Well, I don't know that I think he needed a lot of help. I mean, Peltz and his group, they don't have that much of a share position. Disney's a huge company. And so, it'd be very difficult for Peltz to amass enough shares to have a chance of really winning a vote. Obviously, if he could get other people to go along with him, that would help. Disney getting ValueAct to support their view, the optics of it certainly are good for Disney. It says, hey, here's another major investor with interest in these sorts of things that believes that our view is the correct one, to help dissuade maybe anybody else from saying, hey, maybe Peltz is right. At the end of the day, I don't think it would have mattered that much if they had gotten ValueAct or not. I think Peltz winning a proxy fight was a very long shot to begin with, and it's an even longer shot now.
Well, then what can be done to appease not only Peltz, but also activist investors in general here?
Well, I don't know that you need to appease Peltz. I mean, he's free to go buy shares and say what he wants, but he doesn't have any more power or rights than that. He can make a lot of noise in the press. It's a distraction for Disney. It's not something they necessarily want. But, the sort of just say no defense can be a pretty effective one if you're willing to, sort of turn your ears off and not worry about what people are saying. And I think, Disney would like this to go away, right? They've got real issues with their business that they need to deal with and not be distracted. The fact that some of the people involved in this are former Disney people makes it even a little sort of stickier from a PR standpoint. But again, at the end of the day, I just don't think Peltz has the juice here to force Disney to do anything.
So do you think it's just been a total distraction then, it sounds like, here for Disney? But what about for shareholders? Has this hurt shareholders then, at least over the last couple of months?
It really hasn't helped shareholders. I don't know if it's hurt shareholders. Again, I think Bob Iger's a pretty focused person. To the extent this is a distraction, he's probably not going to let it be that much of a distraction. They're focused on doing what they can do to, turn the business around, which really involves figuring out what they're going to do with their linear networks and also fixing their content production pipeline, which has underperformed the last couple of years relative to where it had been historically. I think neither of those things are issues that have easy solutions that I think Peltz can really help with. To a large extent, these are industry-wide issues. It's not just Disney that's dealing with this. It's Warner, it's Paramount, it's Comcast. They're all sort of in the same boat. The economics of linear are breaking, and the economics of streaming are still not there. I tend to think the answer is to reconstitute the bundle. That the linear bundle is obviously dying, but if you can reconstitute a streaming bundle with everybody's content, I think that's something that consumers would embrace, because it would sort of relieve them of the problem of, which streaming services do I buy to get the content I want at a time when the prices of all these services are going up. Advertising is increasingly being pushed as a part of streaming. Right. I think getting back to an all-in bundle would be something that would be very good for both these companies and for consumers. That's something that I think all the CEOs of all these companies, including Iger, have some recognition of, and I don't think they need an outsider to come in and tell them that.
Right. How likely is that then, Doug?
I don't know. These are all people who, pursued a strategy for the last 5 years aggressively that I think hasn't worked. It can be difficult to admit publicly that it hasn't worked and change direction so completely. I don't know that I think it's going to happen this year. I think numbers across the industry will get better to a certain extent this year because of the price raises and because the spending on streaming content has slowed down. I just don't know if they're going to get better enough to get shareholders to want to embrace these stocks again.
All right, Doug, that's really interesting insight. Really appreciate you joining us on that. Our thanks to Doug Creutz, TD Cowen Managing Director of Media and Entertainment, for talking all things Disney here.